So yeah, Steve, with our trades this week, Trump has really put the cat amongst the pigeons with how he's removed that prospect of fiscal stimulus, and I think it's going to really affect these markets.
Definitely, we're at definitely a crossroads here.
Hello everyone, and welcome to our Trader Talks videos with myself, Richard Perry, market analyst at Handtech, and also Steve Miley, the market chartist. As per usual, we're going to be pointing you towards our website hmarkets.com, where you can sign up for a demo account in 4 easy steps and also become a live trader as well. Now, what we're looking at this week, I think a market's still at key levels. They're flying around on this Trump news, but also fiscal stimulus, Steve, and certainly I think that that is affecting your markets anyway.
Yeah. Well, I'm going to look again. We looked at the S&P 500. It went right up to that kind of resistance zone that we looked at last week. It went right up there and fouled exactly from it yesterday.
34.30, Steve, yeah?
Yeah, 34.30 went up to 34.31. So fading exactly back from that kind of area we flagged last week. And so that's restricted the upside for now. However, we are looking for a potential rebound. Already the market started to rebound. Obviously selling off yesterday when then Trump completely said, right, no more negotiations before the election regarding the US fiscal package. But then we're holding at this kind of trend line, holding above 33.24, had a strong rebound previously September from that 32.10, 32.00 area. So for me, and I know we're kind of slightly differing on our views here, but I mean, for me, the balance of risk is to the upside still. I still see things on the technicals looking positive, back above that 55-day moving average. And I'll talk a bit about the fundamentals in a minute. But what do you see? How do you see that?
Yeah, I just think that markets are now going to be really tested. This bull outlook that they've had in the last week or so, which has been trying to break out again to the upside, failed yesterday on this suggestion that Trump was going to be delaying the fiscal stimulus prospects until after the election.
Yeah.
And that is really now going to test these markets. How bullish are they really? And how fundamentally positive is the market without this fiscal stimulus prospect in the next month? Yeah. And if it now starts to fall away, I think today's reaction is going to be really important. If the US markets come in and sell again, that really, I think, would be a signal to suggest they do not have that much confidence in the bull run at this stage. Now, I think that we could be at risk of now developing into a range play in front of the election. And I think that would be seen, I think, through the S&P sort of breaking this little uptrend. I've noticed the support at 33.24 on the S&P 500. And that, I think, is an important level to watch now.
Yeah, no, I'd agree. If it gets back below there, then things look certainly wobbly. But we've already kind of seeing on the futures overnight, we're getting the markets kind of trying to rebound. And Trump already backtracking on kind of what he said by saying, well, we could do an aviation bill, paycheck, put paychecks in a bill. So he's almost like, I think for me, he's doing the dance, doing the tango.
I mean, for my money, I can't understand why they're not. I mean, they're basically agreeing on pretty much all of the Republican side of the argument, like 1.6 trillion. So why not just put that through and then argue over the balance of the 400, 500, 600 billion that the Democrats want after the election? I just don't get it.
Yeah. And I think for me, the other side in here, I think we've got the fact is that, that Biden's now in some of the polls between 10, 14 and 16 points ahead. If the Republicans don't get in what they want to get in now, they're going to have no say anyway, because there's a growing chance of a clean sweep. We get a clean sweep, then across both houses of Congress,
which would need more fiscal stimulus. So
exactly. So
the markets. It's really interesting ahead of the election, because the markets are going to be all over the place. Because how do they read a Democrat-controlled Senate? How do they read Democrat presidency? That would be fiscal stimulus all the way, wouldn't it? So that would be bullish, surely.
Yeah, I think so. And I think, the Republicans, I think they will do the deal because they're not going to get a say, come after the November election, and the bigger the poll lead that we have, then the less chance we have of Trump causing issues with the transfer of power. That's what the markets really don't want, that transfer of power being, any kind of indecision there. The markets will hate that. So the bigger the poll lead, the more chance we don't get that. And for me, that all keeps us in risk on mode. And if we actually go back to our, which we don't look at so much anymore, the data, data, the data's actually not bad. The PMI data's coming in okay. Okay, the jobs report wasn't great, but the jobs report's all over the place at the moment. So for me, there's still this underlying kind of positivity from potentially from Biden, potentially from the economics of all of this. And I think maybe either Trump's doing a dance or Trump's doing what Trump does, at the moment. But but for me, S&P 500 above 34.31 bullish, below agree with you though. If it breaks 33.24, it's all looking more negative again. But you've got gold.
Yeah, I mean, gold again, really interesting levels. I think uptrends and downtrends are now sort of forming. You've got a formation of a 2-month downtrend on the failure at 1920 yesterday. Pulled back underneath $1,900. That for me is a key moment. If it now fails to get back above $1,900, would that mean that we're starting to see the failure again and the move back towards the mid-1800s? Again, for me, this is dependent on the fiscal stimulus. It's dependent on how the market views risk appetite at the moment, because the dollar, seemingly alongside the yen, the dollar is a big safe haven play at the moment, and the gold is not playing as a safe haven. It's playing as a risk appetite play. It's actually almost aligned to S&P 500, so it's similar to your trade really. And if we start to see the bull failure today as the US markets come in, pulling back this little early rebound that we've seen this morning, again, I think we could be seeing 1850, because I think that how the market responds and the dollar strengthens on the back of this potential, as I said, failure to agree the fiscal stimulus will be important for gold.
Yeah, agreed 100%. I mean, the strong correlation is, as you say, it's not a risk on risk off asset at the moment. It's the inverse of that, because it's reacting with the dollar, and the dollar is a really strong inverse correlation with the stocks, right? So then gold is actually, as you say now, positively correlated, kind of perversely positively correlated with the S&P, and clearly for my money, I'm still looking. You're seeing the risk probably slightly higher. I see us up above on your 2-month down trend line. I think if we rebound above there though, which I'm sure you'll probably agree, if we get back above there and back through 1900 at 1920 kind of area, it's all starting to look a lot more positive again. So a turning
crossroads for all these markets, Steve.
Yeah, exactly. Agreed. Cool.
Okay, thanks, Steve, and thank you for chatting, and we'll speak to you all next time for more Trader Talks.